I'm Jean Gray, publisher of American Entrepreneurship Today and host of the podcast series Experience Voices, where I talk with highly accomplished people who share the critical elements that led to their success. Women and diverse-founded companies have been shown to perform better than their male counterparts when venture capital funded. Patricia Lizarraga has taken that one step further. Building on her investment banking background, she launched an ETF that invests solely in women-led public companies. As our guest on Experience Voices, she shares how she navigated her startup to successfully launch the ETF WCEO and how it is a great way for women to support other women. Patricia, welcome to Experience Voices.
Thank you for having me. This is great.
Well, this is a very intriguing company you have as an entrepreneur, founding a women's ETF. So tell our listeners a little bit about or more about what a women's ETF entails.
Sure. So the WCEO ETF does exactly what it says. It's women CEOs, and it invests in American public companies with a female CEO. And we do that for performance, diversification, and impact.
Which women or how many women, these are from CEOs of publicly traded companies, obviously, so how many comprise the fund?
So right now we have 140 holdings, and that is basically the full gamut of companies in the United States that are public companies run by women who have a market capitalization of $500 million and above.
If I was to go in and visit the ETF, how would I know how you weight your holdings, the assets?
Sure. So what we wanted to do when we created the WCEO ETF was deliver the female factor, right? Our investment thesis is that women CEOs will outperform for many reasons. But the most clear and mathematical one is, as McKinsey tells us, it is still harder for women to become CEOs in the United States of America. They have to overcome obstacles that are not there for other executives. So by definition, they have to be better than the average to get to be CEOs, and the average is male. So the question is, how could you really isolate that female factor, make it about women? And we worked with Wilshire, our index calculator partner, to create a way to really hone in on that female factor. We did it two ways. First, we made it industry neutral. And what that means is, if you think about it, there are more women CEOs that are in consumer discretionary, for example, than there are women CEOs in the energy business or in the technology sector. So in order to not make it a consumer discretionary or healthcare tilted fund, we basically matched the weights of the industry of the WCEO ETF to its benchmark, which is a Wilshire small cap. So the first thing was to make sure it wasn't about the industry, the CEO it's just about being female. And the second factor that we eliminated was size. So if you think about it, if you think about the S&P 500, for example, the 26 largest companies in the United States by market cap have male CEOs. You do not come to a female CEO until you go down to company number 27, and that would be AMD with Lisa Su today at this point. So if we didn't eliminate size as a factor, then we would not be able to deliver the female factor because the S&P is really size correlated. So by eliminating the sector and the size, and we eliminated the size by making it equally weighted, we deliver the female factor.
There's an index that you publish that shows the performance?
Yes. So the index, which is different than the tradable ETF, and you cannot invest in an index, you can only invest in an ETF, is published on the Wilshire website. It's a powered by Wilshire index, and it takes our methodology back to 2018. So as you can imagine, it took us a long time to put this product together. The database did not exist. There was no database that one could buy that told you when a woman had become CEO and when she had stopped being CEO of a publicly traded American company. So in order to create the index, according to our methodology, we had to go back in time, and we chose 2018 to begin applying this methodology. And that is published on the Wilshire website.
So a CEO like Mary Barra at GM, and you mentioned AMD's CEO, when you launched the ETF, was there any personal acknowledgement or recognition from some of these women CEOs, or is there a necessity for them to keep an arm's length from something like this?
I think when you have 140 individuals, you have a range. So some CEOs are very, I would say, vocal about this subject, and others are more vocal about their industries. And there's 140 different CEOs that we're invested in the companies they lead. And I would say there's 140 different flavors of how they want to, if they want to, have something to do with the ETF. The ETF is still rather small, so we're not a big shareholder. We're a very small shareholder of each of these companies. And therefore, we do interact with the investor relations teams, or we reach out to their teams to see if their women's ERG groups are interested in hearing about how women CEOs perform, because that is the data we have.
To grow the ETF, what are the 2 or 3 factors that you're grappling with to take it to the next level?
Sure. So the distribution of financial instruments in the United States is very, very concentrated. So we are very small, and we're not yet on the big platforms on the recommended list like Morgan Stanley or JP Morgan, et cetera. So really, the way to growth is for individual women to say, I want more female CEOs in my portfolio. Today, women's portfolios are by definition almost 100% men CEOs. And so the WCEO ETF allows individuals to add the female factor to their portfolio. And it has to be done by individuals because we are not yet at the large platform size that would allow it to be done, be part of a package that your advisor was recommending to you. So for us, it's really about that's why we're so appreciative and are interested in joining podcasts and connecting with your audience, because it is a word of mouth situation right now.
So when you had the original idea to do this, who did you go to get a buy-in that you weren't going to do it by yourself and that the idea was a good idea?
Sure. So the ETFs by definition, they're a 40 Act fund, and you need a lot of different constituencies to get it off the ground. So some of the people that we work with, our partnerships are, for example, with Vident, which is our sub-advisor and a very, very strong, I would say the most well-respected sub-advisor for ETFs. And the CEO is a woman, and obviously she thought this was differentiated and wanted to support us. On the fund administration and on the trust side, because what happens, an ETF is a fund. It's like a mutual fund. So the shares are held in a trust. And so we contracted with a trust that's run called the Two Roads Trust, Share Trust, that is a trust that is administered by a company called Ultimus. And so we really talked to them, and they also thought that this was innovative, different, and of the moment. And we really thought we think that women want to invest in women. That's what the research tells us.
Your background is Wall Street, right? So you had a platform at least to start with, but you still had to go out and evangelize. So who did you first evangelize to?
So Hypatia's been around for 15 years. And in those 15 years, we've built a very large database of female executives. In fact, 30% of the CEOs of our holdings were already in our network. were already in our database and, we had different, attention, whether they're reading our communications or not. But we've been building this for years. So we have a database that's over 20,000 executive women. And we also have about 22,000 followers on LinkedIn, 16,000 on Twitter, and those are our distribution channels. So we have been communicating with our audience for a year, for a little bit over a year about this now. But again, it's the adoption, it's the conversion that we're really trying to convince people to do. Because, as Sally Crotch has said, if you're not investing in women, if women aren't investing in women, then who is going to invest in women, right? So it's really important that each and every one of us think about, do I want some portion of my RIA or my personal, wealth savings in this investing in women CEOs? The research clearly tells us that they outperform. The performance tells us that they're performing. And so how and when do I make this part of my own personal portfolio? And it's an ETF. So you can, if your personal portfolio is $300, you can invest 30 of it in the WCEO ETF.
And we were speaking about the fact that in the venture capital side, that only about, I think it's 1.9% of women founded ventures receive venture capital. But if they have a diverse team, they end up getting significantly more funding. So there is some sort of gap there as to why such a gap. Just to have a male on the team appeals, it seems, to the VC firms more.
Yeah, and it's still only about, I think, 20%. So it's still, some very large majority of the money goes to male-only teams. And that's the VCs, right? We can invest in VCs, but as a person, you're probably not invested in VCs, right? I mean, I think so as a person, so as an investor in VCs, it's hard for us to change that 2%. But as a person, as an individual, you can change it in your own liquid portfolio. Your portfolio can be more female than it is today. And those are the types of CEO you'd be getting, some really gangbuster CEOs, and in a very diversified manner. So, which is diversification, not putting all your eggs in one basket. Why do we want 100% of the CEOs in our portfolio to be male?
You're talking to the right audience for this. So now looking forward, and you have the databases now, you made the investment, the hard investment, to gather all the information that empowers you to go forward. What does the road look like ahead? Because, I've built some small businesses, but when you're doing that, you tend to have sort of like milestones, or we need to get through the next 6 months, or we need to get through the first 2 years. Is there milestones that you have set up for the ETF?
Yes. So the first milestone is to pass the $5 million assets under management mark. We're close to 4, but we need to get past 5, because until you pass 5, it's considered statistically that you may not be an ongoing company, right? So that's really important, and that is very easily accomplished if just every person in the network put in a couple $100. We would be over that. So that's our first metric, is 5 million, and hopefully we'll definitely get through that this year. The second then is a $10 million mark, and the $10 million mark just allows you to be investable by certain small endowments and foundations that have that as a minimum. And then the third metric would be the 25 million mark, because that's when you're allowed to be on certain of the platforms like LPL and other of the smaller independent RIA networks. And then it goes to 50, and then it goes to 100 for Morgan Stanley, JP Morgan, Merrill Lynch. It's not that people with an account at JP Morgan cannot invest in the ETF. They can. They can tell their advisor, please buy me 1,000 shares of WCEO. What it's called an unsolicited trade. So if you were to talk to your advisor, if you work with a JP Morgan advisor, you say, oh, can you please buy me? But if you ask your advisor, what do you think of the WCO? The advisor is not allowed to recommend it because JP Morgan hasn't put it on their approved list. So that is where it's so difficult for us to grow, because we have many people in our network have come back to us and said, my advisor won't recommend this, whether she's female or male, because they're not allowed to. And when we ask for the reasons, they're actually not correct, right? So 3 of the main reasons we get for not investing in the WCO ETF is, number 1, it's a liquid, it's too small. And that's not true, because ETFs are by definition liquid. They're as liquid as their least liquid underlying security. And the least liquid underlying security in our portfolio, we don't even trade 2 to 3%. We don't even, the whole ETF isn't even 3% of what they trade a day. So liquidity is not an issue, and it's something that the advisor community is not well versed in. 2, they say, oh, it's expensive. But it's actually not expensive. If you look on Morningstar, we're in the second least expensive category for active small cap funds. We're very active. We invest in women. We invest in all women, and we charge less than most people for having an active ETF. And third is they talk about the track record. So, we've been trading for a year and a half almost without a glitch, and we're doing well. But also there is this methodology published by a major financial institution with data going back to 2018 with this exact same methodology. And it shows over 140 basis points per year of outperformance. So that's a lot. So that's one of the issues we need to overcome, is to have women actually pull the trigger, even if their advisors can't necessarily recommend it. So what we say there is, okay, don't put your whole small cap allocation, because it is a small cap allocation. Buy an amount of shares that is not going to cause you a hardship. Remember, they're liquid. You can sell them the next day, but do something, because if everybody just does something, then those somethings will turn into something big.
So let's look at it from the point of view of marketing. When you're on a podcast like this or speaking, is there a SEC requirement that a disclaimer has to be said to the listening audience, or if you're speaking in front of a group? Is there any way or a limitation on what you say, or have to have an explicit disclaimer?
So first of all, it is a public security, and past results are no indication of future results. That is a fact. Second of all, we are not at all saying that the index is same as the ETF. The index is an index, and that is not representative of what the ETF may do in the future. We are not making no claims about that. We're just saying, if you look historically, women CEOs in this methodology you can look at what that looked like, but you can't promise that that's going to happen in the future. You can't claim that that's what's going to happen. It's just our investment thesis that women will outperform.
So you're looking at alternative creative ways of getting the word out. Other than, you mentioned podcasts, are you going into maybe alumni organizations, associations? I'm just trying to think off the top of my head that, there's 50% of the population is women. And a significant portion of them are working, and they're trying to get better returns on their asset base. So I'm sort of fishing here of, are you taking the attack or the tack when you're putting the message out of women have to help women?
So yes. So first of all, obviously a huge connector is social media. And we basically are launched in beta last year, and it's going to get even bigger this year, something called the Hypatia Investathon. And the Hypatia Investathon is an actionable financial literacy program for really focused on college-aged women, to get women to invest early, invest often, and invest in women. As you might be aware, women retire with half the assets than men do. And there's many reasons for that. But part of the reason is because they don't start investing early enough and do not take advantage of the superpower that they have, which is compounding. So what we're doing is we're going to college campuses. We're already on 10 campuses and trying to activate these women into investing in a Roth IRA. And when they are investing in that Roth IRA, we definitely are bringing up, don't you want to invest in women? We just hired our social media marketing manager very, very recently because we were first testing the waters. And the idea is to have that go viral, right? Invest in women. And if you want to invest in women, as far as we know, the only ETF in the world that invests in women CEOs is the WCEO.
So, Patricia, this has been a very educational period or amount of time that I've had with you. I've invested and I've learned a lot about what women need to succeed, and you're pulling things together. So, where do you think the impact will be from your endeavor?
Sure. So that's a great question. And it's really important to understand why we need more female CEOs and why the WCEO ETF can be a catalyst for that. So it turns out we have the database of who all the women are that are CEOs. We are this firm that's studying that. And so we have some definitive data. And perhaps the most important one, the one that matters to you, to your daughters, to your nieces, to your BFFs, to your BFFs' daughters and granddaughters is women promote women. Women CEOs have senior leadership teams that are 80% more female than men. Women CEOs leadership teams are 36% female, and men's senior leadership teams are only 20% female. So if you wanted to get promoted, you should go work for a company that has a female CEO. Except you can't do that because that would eliminate over 95% of the companies in the United States. So you might as well just stay home. And so we believe that this fact that women promote women is why we need more women in leadership. And it starts at the top with the CEOs. So how can the WCEO ETF be a catalyst in having more female CEOs and a catalyst among many other organizations that are trying to do the same thing? The reason is because our job, as we get bigger, Wall Street will start noticing this, and they will notice that women perform. So here I'm going to tie it to board work. So board of directors, one of their most important tasks is to select the next CEO. So why aren't they selecting more women? It's because of something called pattern matching, right? People don't associate successful CEOs with a woman. So that makes it less likely for the boards to select a woman should there be one on that slate. But if there is significant data out there showing how women perform, it is more likely that somebody will bring that data up than if nobody knows about it. So women need more women in leadership to level the playing field. And boards need to get the data the women outperform in a format that it is undisputable for them to support the CEO candidates that are women on an equal footing. And so the way to get this to happen one of the ways, because there's many, many things that need to be done, is to invest in women. It benefits you and it benefits the women in your life.
I had heard, I don't know if it was Washington State has a requirement that women have to be on boards. Have you heard something like that?
Yeah, so California passed a law that the companies headquartered in California, I believe, need to have a certain amount of women on their boards, 30%. Well, it turns out that that's already the average. Okay, but that's another data point. Women CEOs average 40% women on their boards. Men CEOs average 30%. And so it's only a 33% difference, and it doesn't sound like that much. But if you count how many public companies are, the 3,000 public companies in the United States, 10%, a change in 10% of their boards of directors would create thousands of opportunities for qualified women executives to get those spots, right? You have all these organizations that I'm a part of many of them. I'm a part of Women Corporate Directors. I'm part of Women on Boards 50/50. I love what Julie Castro-Abrams is doing on how women lead. I respect and admire every single one of these organizations, and I contribute to all of them in some way or another, because I think we need to have balance in the boardroom. But the fastest way to get to balance in the boardroom is to get female CEOs, because with female CEOs tend to add one or two women to their board when they get there, because that is part of their network, not because they're favoring women. It's just like that is, there's just more opportunity when that happens. So it's really, really important to note that difference.
So fundamentally, what you're doing is you're knocking on the glass ceiling.
Yes, I'm trying to remove that glass ceiling.
And then when women get into positions of leadership, the numbers or the metrics change as far as the opportunities for those that are in the organization below them. And so
absolutely, that's what the data is telling us.
And women can become more encouraged when they see leadership is more diverse.
Right. And they also develop skills and talents and then allow them to also pursue an entrepreneurial path. Entrepreneurs isn't just, Harvard dropouts with hoodies. The actual data, as you probably know, is that entrepreneurs usually have decades of experience in their industry and are able to understand what's missing in the industry. Therefore, the more women we get into senior positions of leadership in the United States, the more that those entrepreneurs will go out and get appropriately funded. So it also works to strengthen that VC entrepreneurial pipeline.
Well, I don't know if it's a major factor, but when there are more women CEOs, and given their compensation packages of today, that more women are becoming affluent, and
absolutely,
and they have enormous amount of discretion as to how they can support other women. So, Patricia, this is, like I said, has been very educational for me. I am very pleased to spread the word about your efforts. Women helping women is really, I think, a major factor across the board, because we do face these hurdles, sometimes obvious ones and sometimes the ones that are hidden. And it's good that you're leading the charge. So thanks again for being a guest on Experienced Voices.
Thank you so much. Thanks for having me.
You have been listening to the podcast series Experienced Voices. To hear more and subscribe, visit AmericanEntrepreneurship.com/podcast, where you will also find a form for listener feedback.